SME or SME Finance Working Group, AFI Working Group members. So I'm basically preaching to the converted. So, but my role today is to provide a very brief background on the topic and perhaps share some thoughts that will lead into hopefully some lively discourse from our esteemed panel. And our topic today has three components, and which I would like to state in the order that I'd like to address them. The first is MSMEs, credit gap, and innovation. Now, 3 points I wanted to underscore in terms of the importance of SMEs. And again, my apologies, I realize that I'm practically preaching to the converted, but 3 points. The first one is that MSMEs are known to be the strongest drivers of economic growth, particularly in developing economies. The drivers of innovation and employment. And therefore, in emerging markets, in developing economies like Fiji, we spend a lot of effort trying to promote MSMEs. For example, in Fiji, over the last 9 years, we've been growing at a rate of around 2 to 3% GDP growth. And that's on the back of only 20% contribution from MSMEs. If you look at some countries in Asia, that goes up over 50 and beyond. It just highlights to us the potential that MSMEs could possibly contribute. We are less than 20% contribution from SMEs in our country, Fiji, and we are achieving 2 to 3% growth in this economic global environment. So it sort of underscores to us and the pretty obvious that MSMEs have a strong role to play in driving economic development. As the IFC CEO mentioned, MSMEs are engines of job creation and economic growth. The second point I wanted to make is that it's no surprise that MSMEs, or what we know as microfinance, seem to precede the financial inclusion agenda as we know it. I know in the very early stages, a lot of people used to have the misconception that financial inclusion meant microfinance. And that's no surprise, because usually when we talk about MSME, we focus on the micro and the small part, the spectrum that deals with underserved, with the poor. Either they are running these businesses or they are employed by these businesses. So frequently when we talk about that, they have no. When we talk about MSMEs, we talk about the underserved, the people who have no formal occupation. And someone once said in a meeting just 2 days ago that if people cannot work and they cannot earn money, then how can they be financially included? The third point I'd like to make is that MSMEs have an enormous contribution. As we see on the slide, 9 out of 10 businesses worldwide, half of global GDP, and 2 out of 3 jobs worldwide. So the question we ask is, if the contribution of MSMEs in any economy is evident, then why do we still suffer from this persistent credit gap? MSMEs face a lot of challenges. We all are aware of it, and it's largely because of its nature. They are normally startups, they normally start at the micro end, they normally started by people who are poor, underserved, as I had mentioned. So by and large, access to finance has been frequently quoted as perhaps the critical barrier, or the major or the biggest hurdle to MSME development. So this is where we are gathered today to talk a bit about the credit gap. So the gaps persist, and I think, in my opinion, when you talk about credit, in any discussion on giving credit, it becomes a discussion about quantifying the risk of giving that credit. And when you quantify that risk, it's a quantification of the default and essentially the success of lending that money and you getting it back. So MSMEs suffer because of the lack of information, and it's basically from both ends. MSMEs cannot provide for for various reasons, the information that lenders require, and then lenders do not have that information, then it basically means that they cannot quantify their risk, and they frequently have to ask for collateral or rise their costs if they are able to provide that credit. So frequently it's resources, constraints from a cost and expertise perspective. So why are we talking about, where does this discussion then take us? In the rise of the financial inclusion agenda, as I've mentioned, we had a session yesterday that talked about the last decade, when we've talked about and we've seen evidence around the closing of the financial inclusion gap. More and more people are becoming financially included, and the striking thing about it is that the MSME gap does not seem to keep pace with that. So despite MSMEs being proven to be at the heart of job creation, this gap persists and is prevalent in developing nations. There are some countries that our studies, and most of us would have readings and research, and we know that some countries, 2 of them are represented here, they've been relatively more successful than others in addressing this gap. And recently we've seen the rise of technology. We've seen it with technology. Just yesterday we heard in one of the sessions that technology is the single most the contributor to moving that needle on the financial inclusion gap. So we've seen innovative practices that are revolutionizing the credit infrastructure processes and procedures, and this is showing us some promise in closing this gap, or in addressing the constraint that lead to the MSME gap. So technology can scale up information gathering from the MSME end and can also scale down costs for credit providers. So the question is, does fintech hold the promise of really moving that needle on this persistent and prevalent gap? So I'd like to just finally conclude with some considerations for the panel and some questions. And some of the specific questions that spring to mind is, to what extent does challenges on information asymmetry and collateral be addressed by technology and innovation? And what examples in the countries of Malaysia and probably Thailand that have been leveraged to address these constraints? What are some of the key elements of the MSME ecosystem that needs to be in place so that we can leverage technology and innovation in their experience so that it can gain traction and flourish? So basically the role of regulator, the role of private or public sector. Mentoring services and hand-holding is key in successful MSMEs. Can technology play a role in delivering these services? And with all this innovation, what are the risks that the panel may foresee? And those few words, I'd hand over to David. Thank you.
Thank you, DG Asala. You were so concise on the 7 minutes that is allocated to each of the speakers. What we can emphasize here is that we want to understand really to say, what do we mean by MSME credit? I remember a story at home. We had an entrepreneur who was very furious to say banks were refusing to grant her a credit. After some discussion and engagement with her, we realized that there was a lot going on with her financial records. And after doing some calculations and some mentoring, after 3 months, she came back to us to say, you know what, I've realized that I don't necessarily need the loan. From my cash flow, I'm able to delay the procurement for 6 months, and after the 6 months, I will be able then to get the new equipment from the money from the business. So that highlighted the issue to say, how can we understand what is the SME gap, credit gap? What are the elements that are contributing to that? And also the issues of credit assessment processes that are used by financial institutions. how effective can those be in terms of addressing the issues of the SMEs? And what new things can we apply so that we make it easier for them? Lastly, we have the regulators. They have the key role to ensure that the financial system is operating in a manner that doesn't compromise on the stability and integrity. So it's an issue of balancing, and then how do we leverage on technology to make things work for all of us. We're happy that we have the regulators here. We know that Bank Negara Malaysia, they have been active in terms of coming up with some interventions and supporting institutions to enhance issues of access to finance for micro, small and medium enterprises. So we will be hearing from Hanif in terms of their experience and the lessons that we can draw from them to address the three questions that we have for this session. Hanif, over to you.
Thank you very much, David, for the kind introduction earlier. And thank you also, Deputy Governor Isala, for the very comprehensive presentation for the team setting. Let me just take a minute to share about what has been going on in Malaysia in our efforts to ensure that the SMEs who require financing, deserve to get financing, indeed get the financing. Now, very briefly, Malaysia has an SME financing ecosystem. Now, don't worry too much if you cannot read each word in this slide. I certainly do not intend to go into the specifics of each initiative, but I will be happy to clarify or provide more information offline during lunchtime or during coffee breaks. So, the key points from this slide is that we have an ecosystem with the necessary elements to provide assistance to the SMEs. The assistance provided are not only in terms of providing funds or money into the hands of the SMEs to obtain financing, but it also includes other types of intervention to support the small businesses. There are 5 key areas or key pillars in the ecosystem. We have the infrastructure, financing and guarantee schemes at concessionary rates, avenues to seek information and redress, debt resolution and management mechanism, as well as outreach and awareness programs. The ecosystem, we admit, is not perfect, and neither it is static. We continuously assess the relevance of the initiatives in the ecosystem, and we do this via regular engagements with business chambers and associations representing the SMEs, also with the lenders, the banks that provide financing to the SMEs. And on a periodic basis, we also conduct surveys. One is to the financial institutions through our credit officers' opinion survey on SME financing, and we also conduct demand-side survey on SME financing. So based on these regular engagements, new initiatives will be developed if there is a need, and often in consultation with the relevant groups. Now, within that ecosystem, the SME financing situation in Malaysia is quite satisfactory, with financial institutions comprising banking institutions as well as development financial institutions is the main source of financing for the SMEs. Combined, both banks and DFIs provide 97% of total outstanding financing. The approval rates for the SMEs is quite high in Malaysia compared to the other customer segments. And over the years, we have seen a steady upward trend in the share of SME financing to the total business loans of banks. So this indicates that the share, SMEs has become a strategic growth driver for the banks to improve their business moving forward. Now, as mentioned, the system is not static. Based on the feedback we receive from the various engagements, one of the key issues faced by Malaysian SMEs is the lack of awareness. There are 2 aspects to this. One is the lack of awareness on currently available financing products and services suitable for the SMEs business. And the other one would be the lack of awareness in terms of what do lenders require the SMEs to submit in applying for financing applications? Now, to put things into perspective, in Malaysia, we have more than 40 financial institutions which provides financing to the SMEs. And in addition to that, we also have more than 150 government dedicated programs for the SMEs. So you can imagine with that kind of number, the process of applying for financing poses significant search and time cost for the Malaysian SMEs. In addition to that, the Harvard Business School has also published a research paper which revealed that entrepreneurs on average spend close to 25 hours on paperwork to prepare for financing proposals. Banks also face additional resource requirements in assessing incomplete information submitted by the SMEs. So to address these challenges, the Central Bank of Malaysia first mooted the idea, and then later on we worked very closely with the Credit Guarantee Corporation of Malaysia, or CGC, to develop an SME financing platform. Named ImSME, ImSME, it is Malaysia's first SME financing referral platform that provides SMEs with a one-stop online access point to financing and structured assistance. The platform matches the SMEs' financing needs with suitable financing products from various institutions and funds in a seamless and efficient manner. So what happens is that the SMEs are only required to log into the portal, submit their very basic information, and this would normally be their business registration number, the purpose of financing, and the amount of financing they require. The engine behind the portal will conduct a preliminary real-time screening based on repayments data from Bank Negara, the financial data from the Companies Commission of Malaysia, as well as the Credit Bureau of Malaysia data. The platform goes beyond a normal aggregator portal. They provide strong leads to banks, to financial institutions, that matches the SME's financial, credit, and bureau data, which includes the credit score and probability of default of the SMEs, to the FIs, to the bank's available products and risk appetite. So what happens if there are matches? I mean, if there are 5 matches, so the SMEs can compare. The matches would also include information such as the indicative rate of interest for that particular financing. So the SMEs will be able to submit online the application. Now, unmatched application will be routed to the ImSME Financial Advisory Team. The role of the Financial Advisory Team, the FA team, is to conduct a diagnostic review on unmatched or rejected applications. Based on that, they will provide advisory on areas for improvement. This is to allow the SMEs to improve themselves before submitting fresh applications to the banks. If it is required, the advisory team will be able to match the SMEs with existing service providers, including those which provide capacity improvement, capacity development, or capability improvement initiatives in Malaysia. And this will be tracked, the progress will be tracked. Any opportunities or areas of improvement will be included to improve, and then the process will be repeated. Now, this has been launched this was launched in February earlier this year. So the latest data that I have, based on a preliminary study by the CGC, the ImSME has actually reduced the search cost of businesses seeking financing. The SMEs, which previously had to travel to multiple banks for financing applications, has successfully reduced the travel and queue time by up to 3 hours. In addition to that, the SMEs also have saved up to 10 hours in preparing loan documentations, and this frees up the resources it needs to focus on their core business operations. To relate to the points mentioned by Deputy Governor earlier, the ImSME reduces the gap by increasing the information flow to the SMEs. Remember I mentioned about more than 40 financial institutions and more than 150 programs, government programs for the SMEs. So you reduce the time for the SMEs to, the need for the SMEs to browse through each and every one of the websites offering those products. Number two, technology. Well, we use the technology not to come up with something totally new, but rather to improve or enhance infrastructure or things that are already in place in the financing ecosystem that I mentioned earlier. So this technology becomes an enabler for the SMEs to be a participant in that ecosystem. And lastly, the ImSME also provides mentoring and advisory services to the SMEs. Today, there are more than 20 financial institutions, banks, which have participated in the ImSME platform that offers more than 30 financing products. Since it was launched, more than 1,200 SMEs were assisted, be it through financing or through other ancillary and advisory services. So in terms of the funding itself, about 200 SMEs have obtained financing of about 30 million ringgit, and that's about 7 million US dollars. Now, the figures may seem small, but we are, in our infant stage. We will assess and correct and address any inefficiencies to make it a better solution for the SMEs. So, yeah, I think I should end right now, David. So, I'll be happy to answer other questions later on. Thank you.
Okay, thank you very much, Hanif, for the elaborate presentation, and it's quite pleasing to realize what the Bank Negara Malaysia is doing in terms of assisting those who could provide finance to SMEs. I know that there is always an argument on the balance as to how far can the regulator go in terms of the issues of SMEs, since the perception that this is a highly risk sector. And as central bankers, really, I think what is key for us is to be cautious and to try as much as we can to avoid if there is imminent risk. Dr. Daran from Bank Thailand will assist us to say on their experience, since they've been doing quite a lot in terms of the issues of SME, how have they been able to support the development of the credit infrastructure for this sector, and yet at the same time maintain the role of the regulator? How has that been possible, and how can we utilize the issues of technology and assist regulators to open on both sides of the coin? Over to you.
Thank you, David. And good afternoon, everybody. And thank you very much for allowing me to share some Thailand perspective on how we go about leveraging technologies to help increase SME access to finance. Okay, so I like to paint sort of a big picture first before we go into any details of what infrastructure that we in the plan to develop or have been developing to help SME. There are three main objectives, and I think it coincides with what everybody was saying on the panels, that the main goal is to increase access to finance. And it's not, we are not just talking about quantity, we talk about quality access also, in the sense that the process, the credit process, the efficiency of the credit process must be improved, and to save both time and cost and money, both time-wise and money-wise, to have to be less costly in that sense. And also to ensure that SME or MSME is sustainable, we need to equip them with all the knowledge. We also have a main objective of financial literacy, both in the sense of financial access and also in doing business also, to ensure that they could survive and they could thrive for their long-term benefit. So what do we see as in Thailand? We do talk a lot to SME and also talk to banks who provide funding to SME. We have SME focus group, and the main pain points that we have gathered from all this for the players in the market is the SME themselves. Every time they go to ask for credit, banks would ask them for collateral, and they would charge them high interest cost. And the root cause of all this is coming from the asymmetric information between the lender and the borrowers, right? That's why it's had every time, no matter how good your project is, if you don't have collateral, you cannot get access to finance. Which led us to the Bank of Thailand, one of our strategic plan is to move from SME from collateral-based financing to what we term it as information-based financing, which means we wanted to create an SME database which encompassed all data, not just financial data or non-financial data, utility, telecom, or even social, footprint, digital footprint. And this would enable the lenders to assess their creditworthiness much better, both the ability to pay and the willingness to pay in that sense. So we hope that this SME database system would help move from collateral-based financing to info-based financing. And with that, with a lot of info, with a lot of information, SME should also be able to get a more appropriate interest rate cost because they can assess risk better. They can charge a more appropriate price for that risk. So it would help in terms of both they don't need to use collateral and they can have a lower cost. Those people who deserve it, let me say. And also we wanted access to finance in terms of creating an environment that is conducive to competition, promoting competition between lenders so that the interest cost is driven down. And one of the innovation that we are promoting, we are trying to create in Thailand, which we've seen it from some other countries, is the trade receivable discounting system. Currently, what we have back in Thailand is every bank, they do factoring, they do trade receivable discounting within their banks. But there's no sort of an open infrastructure that all the trade receivable can be tradable across bank, across all the suppliers and the whole value chain, the whole supply chain. We believe that if this platform is created and we manage to put them all together, the factoring market, the reverse factoring market, it would help promote competition between the lenders and would drive down the cost for SMEs. The second goal I said before on the efficiency of the credit process. And this we actually see a very good example from B&M that what Hanif had just talked about before. And we think it is a very good idea, and we are discussing within our own bank and with the Banker Association to try to create some application portal to enable the search cost to be reduced and then reduce the opportunity cost of the SME. And as Hanif said, they can go and do something else rather than trying to find funding and go and do some, of their core business. And the last thing that we are thinking of, we are doing, not thinking, we are in the process of incorporating all the information, which is quite wide-ranging. Hanif was saying that how many banks? 40 banks and many hundreds of programs. We, in Thailand, there are about 40-something organizations that deal with SME promotion. So it's very fragmented. A lot of information for SME, for MSME to digest. And sometimes it's not very easy to come by. So we among all of us, all the public authorities, we getting together. We building a platform, calling it SME One. So this is a platform, sort of an information platform that would gather all the relevant information for SME, not just on financing, not just on financial access. It's on business also, on how they do accounting, inventory management. So going back to what the mentoring and all these things, so that to make them survive in the long term and thrive and flourish in a MSME business. So that would be another portal that we are putting together. What do we see as a challenge? We know what we want to do. We also know what we are going to face. And it's not going to be easy trying to push all these things off ground. One of the main key challenge that I think we heard for over the last 2 days is data. Data is now king. Customer is king, right? Now customer data is now king. So you need all the data to be able to assess risk properly. You need all the data to be able to enable you to be more willing to give financing to MSME. So this, we think, is not an easy issue, the data governance, but for regulator perspective, we wanted data to be shared within the whole system, because you need a lot. The sheer amount of data, the big data analytics would help in terms of credit risk assessment much better. And this, we are working on the system of data architecture, data governance, to take care of making sure that data sharing is efficient and consumer privacy is protected. The other thing that we found, that in building credit infrastructure or building any infrastructure for that matter, like for example the payment infrastructure that we've been building, it's the challenge is also on the adoption of people who use it or SME who want to adopt it. So it's not just about access. Like for example, you're creating infrastructure, you need people to use it. The usage also, that becomes important. And this has been one of the main areas that we found quite challenging. And it's also, how do you get people to be more familiar with using digital? You need to build trust, you need to build securities. You probably need some incentive for those informal sector to come into the formal sector. And lastly, in this thing, I didn't touch the cyber risk, because the cyber risk is everywhere. It's not just for SME financing. But in terms of SME financing, we see data as key. We see the digital adoption and transformation for those that involve as key. And also the regulators ourselves. We need to be creating a suitable environment for innovations to happen, and without compromising integrity, without compromising stability. So we need to be flexible and agile enough, but also vigilant on all the emerging risks. So how do we see ourselves? How do we see regulator in this sphere, in this space? We see ourselves as both facilitators and both stewards, which means facilitator, enabler. We need to be aware of emerging risks and mitigate risk, but not eliminating them, because we think if we eliminate all the risks, that means we don't allow any innovations to occur. So we see ourselves as being and making our regulatory environment agile enough to accommodate the new products, the new services, while being mindful of all the emerging risks. Okay. And another thing that we see ourselves do, because a lot of infrastructure are more of a public goods. So we see ourselves as giving direction, giving a development plan in this SME financing sphere. and in that, so that all the innovative credit infrastructure can be built and can be used. And I have a few examples up there: application portal, trade receivable, and all that. But a couple of key principles are that it must be open to all. It's like open API, and it must be interoperable. So those are the things that we're trying to build. So let me pause there because that keeps us quite busy already.
Thanks a lot, Darren. We have a serious challenge with time, but what we can mention is that the slides are available. What is emerging here? What is emerging is that there is a commitment from the regulators to try and address the issues of the MSMEs. But I hope you will agree with me that within this sector, there is quite a number of agencies that are taking part. We have the ministries of commerce, we have the revenue authority. So I believe as we continue, we'll be in a position to canvass for support to ensure that we're able to excel, particularly on the issue of information. But I will give the opportunity to Lindo FL and MasterCard, starting with Lindo FL, to assist us to say what are the innovations that can help on the issues of information. I'm happy that there is a mention to say once we have information available to mitigate on the risk, can therefore be a reflection even on the cost of credit for the SMEs. The same applies to awareness. We have to ensure that people are aware of what is available and how best to access those financial services and products. Over to you, Jeff. Because of time, I think Jeff will, as soon as Jeff finishes, then we'll then have Hemant coming, and then at the end, we will then engage the panel. Thank you.
Great. So at Lindo EFL, we definitely agree it's about data. It's also about algorithms. And we've spent the last 8 years developing algorithms to extend credit around the world. We're now extending credit, billions of dollars of credit through financial institutions in over 25 countries. But I first want to say is I started out, I've started several companies, and my first company, we grew it organically, and then one day we got a line of credit, and it transformed our business. We were able to grow much faster, we were able to hire, we were able to do acquisitions, all from that trigger, and since then we've created thousands of jobs across multiple companies, and that credit was critical to it. So we're very passionate about this problem, and we've seen firsthand, we've experienced firsthand how it can change the economy. But the way we got into this was back in 2010. We had operations in multiple countries, and we were surprised that people couldn't access credit, and it didn't make a lot of sense to us. We saw how people were hardworking, they were educated, they had good businesses but couldn't access credit. And we had a theory that these phones would become pervasive, and that these phones would be more powerful than the biggest bank in the world. More data than the biggest bank in the world, more computing power than the biggest bank in the world, as recently as, say, 1985. So if everyone's walking around producing so much data and having so much processing power, why couldn't we essentially put a central bank and a loan officer in every single person's pocket? So we knew from our experience in artificial intelligence that to build these types of algorithms, to push this down to software, you needed data. So we immediately went to some banks and we said, we'd like you to make some bad loans so that we can build algorithms. And they politely showed us the door. We said, no, before you kick us out, we'll give you the money to lend. But still there was no interest in doing this. So we set up 3 lending institutions, one in the Philippines, one in Mexico, one in Colombia, and we issued thousands and thousands of loans. These were installment loans. And at the same time, we developed technology to, with the business's permission, pull all the data from the phone, and also create a very easy interface that they could add additional information like photos, or they could enter information. And what we found was there was a huge amount of information that we were able to get a hold of from that. And over time, we got good at turning these into features that our AI could use to administer credit, or that loan officers could use to administer credit. At the same time, we got the repayment data. And sure enough, after about 4 years, we could get to the point where we could predict for a micro business and for an individual the likelihood that they would repay a loan, their willingness. All this from the habits, from behavioral assessments in some cases where we'll actually ask survey questions, from the rich data set that comes, and also from who they interact with and how how the community interacts with them. If you think to microfinance, we interviewed dozens of microfinance professionals, and what we learned was that the community knows who is trustworthy. Professor Yunus really showed that. And what we've shown is that the community data, how they interact with someone, is predictive. And just from a framework standpoint, when we first started out, we said, we showed this to a retired banker, what we were building, and he said, JP Morgan would like what you're building. And we said, no, this is for emerging markets, you don't understand. He said, no, I'm talking about Mr. JP Morgan. Mr. JP Morgan once said that when asked what's more important, loan to asset ratio or loan to income, he said the character of the man. And from the beginning, we thought of what we're doing as building algorithms to analyze character, to analyze reputation. And for a small business, not a larger business, the cash flow is going to be really, really important. What industry they're in, the local economic factors are going to be really important. But for that small business, it's really about the character of the owner. And we think this is a solved problem. And we've developed this technology, and now we make it available to lenders everywhere. Great.
Okay. So first of all, let me make an observation. So I was actually in a similar panel a few years ago at the AFI GPF. We talked about the same challenge. So challenge kind of like still remains same, but I think both the public and private sector participants in that channel, in that session, sort of had more rudimentary ideas. So it's good to see that there's some evolution, but obviously, as the team setter pointed out, the challenge hasn't quite gone away. So, I also don't have slides, but I want to use some key stats to sort of frame what I want to say. So I don't think this number was used, so I'm not repeating anything. So about 365 to 445 million MSMEs that are out there. It's a World Bank stat. And of that, about 250 to 300 million, both in the formal and in the informal sector, don't have access to finance. So the credit gap is still about 300 billion or so, which is quite huge. Still remains a problem. Now, the good news is with my colleague here, Jeff, and also on the public sector side, there are some better approaches in place, and I want to sort of talk about what MasterCard is doing in this regard. First of all, this is so important to us, so I want to talk about one in the form of a commitment. We recently, when I say recently, about a year and a half ago, we made a global commitment that in the 5 years time from that commitment, we will bring in credit to about 40 million underserved MSMEs, So that was one global commitment, and we are sort of like about 20-25% of the way. So we still have a ways to go on that. And the second thing is, this sector is so important to us, and I'm sure as it is to our competitors too, that, frequently, very frequently, a small business or MSME sort of a strategy is taken right up to the board level, and this is seen as a commercial opportunity too. So because regulators in the room sometimes forget that you actually have to be profitable to be able to provide these services to the small businesses. So I want to actually touch on 3 things. So, MasterCard is a B2B company. Traditional model is, it's not that we are new to this space. We've traditionally worked with banks to provide our products, credit facilitation products to the end consumer. in this case business. And what we've seen in the past is that if a bank has a interest but maybe not the outreach, they will only go so far. And we've also seen historically that a lot of the big banks, because of the risks involved, don't quite want to reach out to the segment that we're actually talking about in this panel. So with this in mind, MasterCard about 2 years ago signed a $250 million joint risk share facility with IFC, which is in operation right now. What it essentially allows to do is to bring in the MFIs or smaller financial institutions that would traditionally have relationships with the MSMEs, underserved MSMEs, to sort of like become a licensee or a friend of the MasterCard brand. Now, typically, the issue was that it was the inability of these small financial institutions or MFIs to cover the settlement risk. So if for somehow their client base was not able to repay back the loans, then there would be some sort of a default, and then this creates a domino effect from that point on. So that's definitely allowed us to now move to the segment, go beyond these big banks or medium-sized banks to these smaller banks, MFIs, and it's kind of huge. So obviously, I cannot talk about success rates yet, but if I'm doing another one of these in 3 years' time, maybe there will be some proof points to talk about. Second thing I want to talk about is the whole diversification beyond the bank channels, and something, Jeff, you alluded to. It's like using like payment aggregators like Square in the US, but there are many others in Africa and Latin America and other parts of the world, and even technology companies like PayPal, because they have a huge outreach with MSMEs who have some sort of a presence, online. And we're also working with digital solution providers, e-commerce software vendors, as a channel for distribution of SME solutions. I mean, right up from Google, which is a global brand, to Xero, BigCommerce, Shopify. Some of these you might not have even heard about, and there are many more. I mean, these are again a way to sort of go where the banks will not go. How do you do an outreach? I know with Facebook, we recently launched a pilot in Nigeria where some sort of a streamlined KYC process already happens if you're a Facebook, if you're on Facebook, but you're not a banked sort of a MSME, and that takes care of the KYC, and we've done that whole facilitation aspect too. So there are many different ways to go about it. Third one in that segment is the alternative lenders like Cabbage, who also use data, Jeff, as you alluded to, where banks have not focused before. And again, in this particular case, it's not necessarily, perhaps there is some psychometric element involved, but this is really based on the whole sales data and the forecasting and that you will do, and the ability to sort of like, based on that, get the credit and then to be able to repay that. All of these are addressing the challenges that MSMEs face. Now, MasterCard obviously handles some of these aspects, but the 5 that I want to quickly touch on, it's really managing the cash flow. I mean, it's really accounting, payroll, forecasting, access, and spending controls and what have you. Then there's the managing payment aspect of it, the whole acceptance piece that we in our industry like to talk about, processing and making payments. So this is our core business, so obviously we are very much involved in the whole process. And then the other few are the operations, the technology utilization, and the most important one is really growing the business. A lot of times, even if you're a unbanked kiosk owner in some remote part of the world, you are still sort of selling products and services which were manufactured in the formal sector. So that brings me to the third point, which is the whole supply chain, which is kind of like the flavor of the year, I should say, where we found this as a very prominent channel to do outreach, or more like credit facilitation to the unbanked, underserved MSMEs in rural areas as well as in peri-urban areas. So in this regard, we have a large, actually the pilot is over now, so it's kind of being scaled up with Unilever. We started off in Kenya. So, a large number of these kiosk owners would be selling Unilever and other products, but they did not really have, they could only sell what they had the money to sort of buy from the distributor, not sell what they, or not sort of procure what they could actually sell. So there was sort of a credit gap. So if I had to use an example, if I could sell 10 tubes of toothpaste, but only had money to buy 4, so I have a credit gap, a microcredit gap of 6. I know I can sell that much. So essentially for that kind of a problem, MasterCard worked with Unilever, 2 global companies, to manage that cash flow in that supply chain, because it is actually unsafe, expensive for distributors as well, because they're dealing primarily in the cash economy. So how does this work? I mean, I want to use this example because this will give you a flavor of some of the things that we've talked about here. It's really a low-risk credit. In this particular case, there was a commercial bank involved, Kenya Commercial Bank, KCB, because the bank always has to be involved, or a MFI, it could be. And in this particular case, it was this. Yeah, no, I'll take 30 seconds, so hopefully. It's a 17-day interest-free credit, which basically allows them to procure goods that they think that they can actually sell. So there's already some sort of a sales forecasting going on in the process. And then, of course, they can repay this back with M-Pesa agents and banks. And then so this is the point I want to touch on, is this whole data sort of thing that you are now building on, which then the bank can then use to sort of provide other products and services. You're building a financial history and some sort of a credit record. So obviously we are looking at now ways to include insurance onto it in Kenya. Now this is also being rolled out in India and some of the other markets in Africa. So I see this as one of the main ways, the whole supply chain as one of the main ways for credit facilitation within the whole MSME segment. All right, thank you.
Okay, thank you very much to the whole panel team. What we can mention and draw from the presentation, first of all, I think we can get from Lindo FL and MasterCard that there are avenues that are being put in place to even attend to those issues for businesses that are informal. If you can put together alternative data to come up with a profile for a business, I think that addresses one of the aspects which has been difficult to address for those businesses that are not keeping records. And also to summarize the issues of information, if we can get information on the profile from all the activities or the behavior of the business or person, I think that addresses one key aspect, since for most of the businesses are too small to separate the person from the business. And also the database, these businesses, they have to be bankable. And for them to be bankable, the entrepreneurs, they need information, both the business and the technical, so that they can determine what works for them and how best to improve productivity. The same applies to information on the business cycles, so that whenever a loan has to be extended, the terms have to align with the business cycle, so that at the end the business is in a position to pay back whatever obligation. The ecosystem, which makes it easier, we need the collaboration both from the regulator side. As innovations are coming, how can we then provide for those elements that are more of a public good? There has to be an agency that will make that available and ensure that it sustains. Ultimately, if there are improvements, that has to show in terms of the cost of credit for the businesses. So I'll give an opportunity now, because of time, to 3 people, and also to encourage that we go to the survey to provide on the assessment of this session before we leave. 3 people who have some comments, questions, or clarification.
Thank you very much, and thank you to all the panelists and for the insightful contributions. My question is, how do we balance regulatory requirements or international best practice to supporting SMEs? Because what we are finding is, as we are trying to meet international best practice or some regulatory standards, we seem to be violating, or we seem not to be able to support the SMEs adequately. Thank you.
We take 3 at one go, and then the panel will respond.
Yes. Thank you, moderator. Thanks for the panelists. I am seeking an experience through the panelists about scoring the alternative data for SME. Could be efficient and accessing to finance for the SME, or could generate or create obstacles for SME due to the risks enforcing the SME sector. Thank you.
Thank you for very good conversations. I have 2 comments. The first one is the focus on credit as far as MSME financing is concerned. I understand that credit is very important, but other ways of financing business or facilitating the enterprise to be much more efficient is also important. So from the innovation perspective, from the data that is being generated or could be generated through those innovations, I think it's important to underscore the need of other services, not only credit, as far as enterprises are concerned. So, and I think I've heard from the moderator that in many instances or some instances, when they realized they were able to manage their businesses better, they did not need that money, which is the cash flow management perspective. And this coming through from many ways, and I think from inventory management, from staff management or customer management, as these businesses expand their capabilities to do so, then they can actually make effective use of their money, no matter how small that could be. The second one is in terms of, I know I'm talking to the regulators here. If credit is so important to, to the economy, it's so important to the household resiliences. From the policy perspective, why is it difficult? If we say SMEs are engine of growth, and you regulators are here, you're advising the government, why is it so difficult to break through? I always, feel that we talk about this too often, but I don't get answers. I want to ask you, why don't we advise the governments to break through, so that SMEs can really become the engine of growth?
Thank you very much for the panelists for the valuable information. I just would like to add one more thing, that building the infrastructure or preparing it and setting up the regulatory framework, definitely it's important, but this will only open the way for this type of innovations to operate in the country. This will not lead to the usage. I think as a regulator, we should also working on building the trust of the people for the SMEs to use it. We have many cases around the world that we have many types, alternative credit scoring now. There is a lot of companies that provide this type of services, but until now there is no trust. So the regulator should play a major role in this regard. And the trust, it's a very broad word. It's different from country to a country. But most of them, they agree that building the financial capabilities of the people and increasing the openness or the transparency and the disclosure of this type of innovation, they will lead for the trust. And by the end, we can say that we have a mature usage in the country. Thank you.
Thank you. We have questions and comments. If I can highlight a bit, there is a question on the balance between extending the credit to SMEs and also ensuring compliance with international practice. So for that one, Hanif and Darren, I think the two of you will assist us on that. There is another one on the scoring, data for scoring, which I think the private sector can provide some insight. And I will put the Deputy Governor on the spot to say, if SMEs are important for economic growth in our countries, why is it difficult to then extend that credit to them, since we need the economic growth? Then I think, Jordan, it's a comment. Okay, thank you. Regulators, private sector, and then the DG.
Okay, I'll just attempt to answer this question in terms of balancing regulatory requirements with providing access to financing to the SMEs. Well, I'm not sure how other jurisdictions have organized their institution, but at the Bank Negara Malaysia, we have what you call the regulation sector, headed by one assistant governor, and the development sector headed by another assistant governor. So there might be instances or situations where, you know, both sides do not see eye to eye. So that then becomes the role of the management of the bank to decide which one prevails. But having said that, I think the focus of AFI for the past few years, and certainly I suppose in the GSPC and GSPWG, is that of proportionality. So I suppose there are avenues for, you know, developments in looking at SMEs as a very important engine of growth for the country. So there might be certain what you call regulations or requirements that can be tailored towards, you know, balancing the regulatory requirements plus the access issue. So in Malaysia, specifically on SME financing, we haven't had to do much of proportionality, because we are to a certain extent satisfied in terms of the performance of the banks in lending to the SMEs. But in other areas, for example, when we first approached the issue of agency banking, we do not have a regulation for agent banks at that point yet. I think that was back in 2012. So we worked together with the development financial institutions. We also look at the loopholes in terms of the technology. There are what you call various inputs from our specialist risk unit regarding technology areas. So, and then those inputs were taken before we roll out as a pilot. And then after the pilot has been rolled out for, I think, about 6 months, then we come up with the regulation. So that is something like, as mentioned during the session, participated by the governor of Central Bank of Kenya. M-Pesa itself earlier, it was essentially a regulatory sandbox, although it was not named as a sandbox at that point. So I suppose that's the best I can do at the moment to answer how to balance it. Thank you.
I will just add a little bit to that. It's actually a project at the Bank of Thailand at the moment. It's a regulatory impact assessment. We are actually looking at SME financing, whether our regulations are actually causing the cost of credit to increase without we knowing it. So to answer that, the main principle that we are adhering to is prudence is first and foremost, that we are not compromising on prudence. But on any other aspect like operational efficiency, we may be, without knowing it, with all the legacy of regulations, is actually adding to that. So we're reviewing the whole regulations. Like, for example, we have regulations on collateral value assessment, that if you go to different bank, you have, the burden is on the SME to pay for the same collateral value assessment for every bank. Without we knowing it, they interpreting it like that. So this thing, I think there are rooms for regulations to improve and help reduce the cost of credit if it's on the operational burden, operational efficiency side. But if it's on the prudent side, I don't think if we need to help on the, like, help give a soft loan, for example, a lower cost of credit, it should not come from banking sector. It should be more on a fiscal policy subsidy sense.
It's actually very easy to get a lot of innovation and competition and credit to small business. I just open it up, you just simply open it up and make it very easy for international non-bank lenders to extend credit, and let the ones that aren't able to figure out how to deal with collateral and aren't able how to assess the businesses go bankrupt. You just don't want your deposit-taking local banks to go bankrupt. But it's very easy to get credit to the small business from a regulatory standpoint. The problem with extending credit to small business is actually not getting loans to them. The problem is getting repayments. And as an entity in another jurisdiction, that can seem very scary. So the clarity for how they're going to be able to collect the money back or receive the funds back will bring lots and lots of competition to it. And I can say from having worked with lenders all over the world, they're eager to extend credit to these small businesses. They're willing, and the technology is now to the point where the transaction cost is small enough that this can happen. So I hope that addresses sort of the question of how do you how do you address this in a way that maybe is more aggressive at getting to small businesses?
So just to add to that, I think the example that I sort of mentioned, first of all, there isn't a single or one or two use cases. There are many use cases as we see emerging. So if microcredit is a way, is also a use case, the one that I described in the supply chain context, is a way to sort of open the door, kind of look at the whole behavioral sort of like a pattern there in terms of repayment. I know mobile payments data or mobile usage data has been used in some instances. So it's just a matter of, as Jeff alluded to, it's really determining the repayment capability. Now, how you go about doing that is that there are many different models emerging. So I think this is where innovation is happening. And I think stay tuned. I mean, as more and more of these success stories sort of develop and are scaled up, this hopefully does take off and sort of starts to close in the credit gap.
Thank you. The question is a difficult one, and it's basically why the whole topic here. But if I may, like in my country, I use my country as an example. My country, the credit gap is estimated at 1 billion, and that's probably $500 million US, and that's almost that's 1 billion is about almost about 10% of GDP. So the point I'm making is it's a huge gap. It cannot be solved by one institution. Government can throw money at it, and then it becomes a political issue because when you give credit, there will be losses. So it's best always left to the agents in the economy that are best designed to handle this. And when it comes to the banks, and like we know with all innovations, there are players as we have Lindo FL and Visa and MasterCard entering that space because of innovation, that will probably assist it. But from the bank's point of view and from institutions that are supported by governments, supported by central banks, eventually it comes down to when you lend money, there will be losses and someone will have to wear that loss. And then it becomes the issue of pricing that risk and lending, and then we go through the whole cycle of information asymmetry, which we've been talking about, and trying to improve the information flows. The data shows that MSMEs are bankable. We need to, for some banks, because of their cost structure, lending, they don't want to lend to MSMEs, particularly down the scale of the lower end, because it's just costly for them. So many demands, so many requests, and so they prefer to stick to the high end. So the issue is scaling, like some of the probably automating the application that will bring down costs and enable them to meet the needs. But that's probably in my response to that question is that the gap is just large, and it requires agents in the economy that are designed to do this. And that's when we come right back to some of the issues we've been discussing today. But thank you.
Thank you, Esala. To help on that, I can add that in most countries you find that there are government-supported credit programs that are intended for those groups that cannot be readily absorbed by the private commercial banks. I think there is a need to ensure the effectiveness and efficiency of those programs in terms of being in a position to target those enterprises that have a potential to grow, and also to facilitate an integration between the private sector and government, so that there is that transition for those that are now able to directly benefit from the commercial banks are made to do that, and also to provide avenues whereby for those elements that can make the enterprises viable, that grant support is strictly provided to those products, so that at the end we have more businesses being catered for by the commercial sector, since they have a way of appraising what is likely to pay back the money. I would like to thank all of you for participating in this. I know it's quite an interesting topic. For those who might need to continue to engage, I think the panel will be in a position to share information on their details, so that we are then able to continue the discussion. Thank you so much, and wish you all the best. Please fill in the survey in your apps. Thank you. And thank you so much to the panel.